Hey traders, it is the very first trading day of May here. It is early hours here, still before the market opens on May the 3rd, 2021. And so, as is always the case, we want to update our portfolio, our model portfolio results for year to date, but more specifically the last month of April that we just went through with our asymmetric trading system. We are now January, February, March, April. We're 4 months into the model portfolio at this point, starting to build a decent amount of data, continuing to enhance, alter, improve. One thing that I want to make sure in this system is that we're always looking to not rest on our laurels and always try to find some ways to enhance the dual mandate that we have, which is to try to keep pace or beat the market's return while doing it with less risk. Two pretty big tasks in and of themselves, but when you combine them together, it's almost monumental. We hear in the marketplace so often risk reward, right? Risk reward. There are trades that you can do that are very safe, that may make you 3 or 4% a year. There are trades that are very risky, but they can make you a ton. They can make you 20%, 30% in a day, right? But that's how everything seems to work, this risk reward ratio. If you want reward, you've got to take risk. And so it seems almost, contrary to anything that is even possible to A, set a goal to beat the market's returns, but B, do it with less risk. But we've been doing pretty darn well so far. Really very happy with our overall results. So let's get into it. Let's go through this. I will put a link below in the description if you do want to have a free 2-week trial to come in and see how our model portfolio works and the idea behind it. I've been really, really proud of it, guys. And so let's get into it. Just a quick review of our first quarter's results. January was a good month. We had about a $1,200 profit on a $25,000 starting balance, almost 5% return for the month. It was a great start to the program. We were very positive alpha. As I say, almost 5% return versus a loss for the market, 13 profitable days versus 6 losing days. We don't need to go through this again because we've touched on this already, but here's the documentation for all of our trades for that period of time. February, the second month of the program, was just gangbusters. It was absolutely just amazing. $2,400 profit on about a $30,000 starting capital, almost an 8% return in 1 month. Guys, that was an aberration. I don't think that is something to look for. That's not something to hope for. We were obviously very positive alpha with that, almost an 8% return versus about a 2% for the market. 12 profitable days versus 8 losing days. And here's the documentation on February's trading results. March, we get into March and we had a stinky month. It was a yucky month. An $804 loss for the month on $32,500 of starting capital, almost 2.5% loss for the month. Negative alpha, obviously, for that month, down 2.46% versus the market just absolutely killed it at 4.24% for the month. We had 11 profitable days versus 12 losing days, just could not gain any traction. And if you look in March, you see that really it was the first 4 days. It was the first 4 days out of the whole entire period that really, really knocked us down. We had a big 1.8 loss on March the 3rd. It was better than what the market did, but boy, just a 4-day losing streak right there that really hurt us for March. And there's the ending results for March. But for the first quarter, still very, very positive in terms of what we were able to accomplish. Up 10.31% for the first quarter versus a 5.74% gain for the overall market. So off to a great start. This is our results for last month now. This is April. So in my portfolio, started with $33,524 on April 1st, had a $1,688 gain for the month. So a 5.03% return for the month. We were pretty much alpha neutral. Now, alpha is putting ourselves in a position where we are beating or besting the market's results. We had that was an impressive result. We had a 5.03% return for the month versus the market, which killed it at 5.24%. So, for all intents and purposes, we pretty much matched the market. Just a quick commentary here, folks. The market's not going to make 5% a month every single month. That annualizes out at 60% a year. Yes, the market can go up 60% a year. Yes, it does go up 60% a year. If you look at time periods where that has happened, that usually is after a correction like we had with the coronavirus hit last March, or it's coming off of a big sell-off. It's a rebound. The market is making 60% in a year from a much lower base. It is rebounding. Markets don't go up 20-30% in a year and then go up 60% the next year. That's just not what the market does. The market averages maybe 15% a year, year after year. So I guess my point in this is that, guys, if the market continues to perform like this and go up 5% a month, month after month after month, it is going to be incredibly difficult for us to keep pace with that. It would be difficult if we were taking an equal amount of risk. It's almost impossible to keep up with that kind of return pace when we are endeavoring to take maybe half as much risk. So again, I don't think that we have really, from January until today in this program, we really haven't had an opportunity to let this system really shine. And where this system, of course, would shine is in a flat to bearish market. Obviously, the market doesn't have the intrinsics that we have. It doesn't have the ability to generate cash flow. It doesn't have the ability to create downside protection. It doesn't have the ability to make money to the downside. So we have yet, 4 months into this program, we have yet to see this program, I think, really shine. And that would happen, not if, but when the market flattens out and or goes down. But nevertheless, still an awesome result this month, 5.03% return versus 5.24% for the overall market. We had 15 profitable days during the market and 6 negative days. The S&P had 12 profitable days versus 9 negative days. And so here is, the aspect of our dual mandate, which the second part of that is risk management. The volatility that we experienced, and we view volatility as risk. Our volatility was 61% less than the overall market. So yeah, we didn't kill the market's results this month, but we certainly beat it on risk. We beat it on volatility. And I think that's the big thing. If you look at the results for the overall market for the month of April, yeah, it was up 5.24%. That's awesome. That's wonderful. But you also see some pretty big swings. Now, that's great, right? Up 1.1% in a day, up 1% in a day. But you also have the swings the other way, down 9.9% in a day, 0.6%, 0.5%, 0.7%. Think about that risk, think about that volatility. In an entire month of trading, the market was up about 5%. And on any given day, it is giving back or it is making 20% of that. 20% of the overall results for the market for a 1 month period of time came in one trading day. And so that's a lot of volatility in there. And so I am very, very happy with our results this month. Not just that we killed it on the rate of return. We were able to essentially keep pace with the overall market, but we did it at, again, 61% overall volatility, 61% less overall volatility in the marketplace. Okay, here's our results from the month. There's my starting balance at 33,524 to document everything that we're doing. You can see that we had very little drawdowns to start the month, and that was very, very big for us. We rolled the SPY trade to start off the month. April 6th was a big day for us as we added more anchor core positions, and we started to use covered calls or covered puts, as the case may be, on those positions. That added to our ability to reduce volatility, also gave us a little bit more certainty in the trade. April 7th, we reset that anchor trade. April 8th, we became fully invested. So it's interesting, we've talked about this before, that cash is a viable position for us. And this system works best in a trending market, whether that be bullish or bearish. It doesn't really matter to us if the market is bearish or bullish in this system, because we can trade in both directions. That's part of the asymmetry that we can create. But these markets that just ebb and flow back and forth, those are tough, and we get kicked out of a lot of our trades, and that creates some turbulence in the portfolio. And so cash, just sometimes sitting in cash with a good portion of our portfolio, is a viable approach. Took us until April 8th to get fully invested at that point. April 9th, we had our first bad day, had a lot of short positions on that didn't work, just didn't work that day. The market whipsawed us a little bit. April 12th, big day. You can see big rebound right there. We had several of ours hit that 3% win mark, and that helped quite well. Had another good day, and that was where our short positions then started working for us. So again, I loved these 2 days back to back right here, April 12th and April 13th, because we had a big day on April 12th with a bunch of our positions hitting that 3% bracket win level and automatically kicking us out at a profit. And then the very next day, we had some short positions that were making us money to the downside. So again, I do think that this system has yet to really shine, because we haven't really had a substantive down market to let it work in and let it show its strengths. April 14th, again, we were keeping pace with the bull market. If the market is going up 5% a month after month, guys, I'm just going to tell you, it's a tough task. It is a tough task to keep pace with that. I do not think that this system, I don't think that the market is going to make 60% APR over a 12-month period of time here, and I certainly do not expect us to do that either. Those are just numbers that are not really real for a long period of time. And again, I want to reiterate that this is a long period of time. We look at this on a day-to-day basis, but really even measuring it on a month-to-month basis is probably not fair to the system. It's probably not fair to ourselves in terms of evaluating whether we're doing a good job. Quarter by quarter is probably more apropos. We need enough data to be able to allow the little daily machinations to take place. But anyway, on April 16th, we did add a VIX to our core holdings. Now, this will happen from time to time when it does look like the market is ready to turn, but that worked out really well for us. We were able to add some substantive profit by doing that, and it was sort of a win-win here. If you look on April 19th, adding that VIX was a big part of helping us with that. The market was down about 0.5%, and we were up just a teeny amount. But these are the days that really separate us from the marketplace. You only need 2 or maybe 3 days in an entire month of trading where, maybe the market is down 0.2% and we're up 0.4%. And if you have 2 or 3 of those days in an entire month, you can sometimes have the potential to almost double the rate of return of the marketplace over that month's period of time, while obviously taking a lot less risk. April 20th was a good day for us too. Again, had 2 of our stocks hit that 3% take profit target. Couple of days of losses here. We had several rolls that we did on April 22nd. Anytime we do a roll and we've got some commissions and fees involved and we've got bid-ask spreads involved, it's really tough on the roll days to show an overall profit. But of course, it does work out for us in the more long term. April 23rd was a down day, a 0 day. Let me try to show you the ones that are getting cut off here. There's April the 26th, a positive day. 2 lost days in a row there on the 27th and the 28th. Again, we initiated some rolls there on those particular days. And then last but not least, April 30th, we had a down day. A little bit of a bummer on that. I don't think we've ever had a month yet where we have ended the month at the highest dollar figure that we ever had. I think that our highest dollar figure was 35,331 on April the 23rd, I believe. So we were very close to the high of the month. That doesn't really mean anything in the big picture, but it's always nice to do that. So it was a little frustrating that we were down on the last day of the month. But nevertheless, if we look at our results now in the system, year to date, January 1st to the present, you can see the asymmetric trading system versus the S&P 500. We are up about 15.34% year to date in the program versus about 11.32% for the market. Now, again, I'm going to state a couple things. Our goal is dual fold. It is to beat the market with lower risk, right? Sometimes beating the market means more than other times. If the market is doing this every month, if it's losing 1% every month, that's one thing, right? I mean, we could, for heaven's sake, if the market's doing that every month, we could just sit in cash and I could show you a total over here of, hey, we beat the market, right? And that would still be valuable. It would be good, but, it's not as impressive. When the market is going up, I mean, forget this. Forget 5%. Forget 4%. Almost 3% a month. Almost 36% a year right there. Guys, it's really, really hard. It is really hard to put up these kinds of numbers month after month after month and do it with taking less risk than the marketplace. These are just knockout numbers. The market is in a massive bull market right now. It is just absolutely charging higher every single day. At some point, that's probably going to change, but for right now, the market is just killing it. So for us to be able to be ahead of the market right now, guys, I am tickled pink with that. I am absolutely thrilled with that. But the real key is that we're doing it at less risk. So there's an overview for our results for April, folks. Starting a new month here today. So knock on wood again, we will have some good positions to start the month with, and we'll be adding to those here as the week goes on. Thanks for checking in. Again, if you're interested in a couple-week free trial to look at the model portfolio that I set up and how I trade this, I'll give you a link in the description below. Take care, guys.